Hello, this is the CEO of Weisenbach Investments, and I am going to do a market review. So, first I want to take a look at the euro. So, I have been short the euro of late since around here through options on FXE. And the options are here. But first of all, here we are, and I thought fundamentals were going to sort of take over. And the fundamentals did take over. You see they clamped down. Now today we're up, like many markets, they just took a little bit of a rally. So here's two things that I'm expecting. Since I own equity options, I'm not too worried about any loss now. So right now, what I see can happen is this down day is going to clear up this. The price is going to break this area and shoot up, or we're just going to tank down. Now, personally, I think tanking down is most likely in this case, especially if some European news comes out in the morning. And that's what I'm hoping for on the euro. So next I want to look at treasury bonds and some interest rates. So right here, this is a chart of treasuries, and treasuries have shot down kind of on the motive of the stock market going up. And you see we had this down area and we kind of bottomed out around this level. It broke the support, but often this happens, they just bounce right back. So to me, it looks like we may be forming some sort of resistance around this level, and there's some definite resistance. So obviously this would be a strong breakout to the upside if it breaks this level. Now, of course, there's probably going to be a V correction and all that, but if you look at a longer term chart, we've starting to get into a longer term downtrend. But to me, what's starting to happen here, and I'm going to end up hiding these, is we are kind of making a V formation here, whole W formation. So there's two things I think are going to happen. We can continue our trend down, and that's more likely based off the Elliott wave pattern, considering this is wave A, B, or C, or we could extend this wave and make it extend to wave 5 like we've seen in the stock market. And the thing about the stock market is there's so much strength in it, it just keeps popping back. It's done this before. It popped up, popped back. So I could expect it to pop. It could likely go up, but I'm really hoping for it to go down. So if we look at a profile chart, this is a 4-hour profile. I'm going to change it to a daily. You can see that we came off on the point of control here. So it's quite likely that we move farther to the downside. So next we're going to look at the S&P 500. Oh no, sorry. We looked at the S&P. We need to look at the NASDAQ. And the NASDAQ, it's been, not too much stronger than the S&P. If we look at correlation, and not to the there, if you look at it, you see we're pretty darn correlated. So obviously stock markets are all moving in the same manner. So it's basically the same sort of commentary on the NASDAQ. We keep rising and rising and rising. It's just the same story, but today we seem to be a little weaker than the S&P. And last we have the Russell, and I feel I'm in the mood to switch this over. So here on the Russell, it's all the same thing. Of course, it's stronger than the S&P right now, and I considered getting short the Russell in this zone. I got out of the position. I did it through options, so I didn't feel all that pain, but I did not do... I really don't like to trade the Russell because, of course, I've started doing more mid-cap, large-cap stocks, and I am not a real big fan of small-cap stocks. So, I want to look at oil. And for me, oil can continue to move down. It's quite likely that we continue to move down. Because, QE3 is really not working and people do not care too much about QE3. So that is sort of something to think about. But of course we're rallying on this zone. So to me, we'll probably see a correction. But on that correction, we'll see a move up. And if we look at a 2-hour profile, you can see that we still have room to go. We're kind of getting into this lower volume node, so we may fall back into the probably more the 90 range. If we look here, we'll probably fall back into the 90 range. That's my prediction. And then we'll probably rise farther. And here we have gold. To me, gold's topped out, but this profile could expand. But obviously, there's no buying. So what's likely is we move down, and then we continue a move to the upside like this. A lot of people call this a bull flag, and it could also be bearish. But what could end up happening is we just shoot up to the upside. And then fundamentally, I don't know how much QE3 is going to start driving assets. So I'm personally careful trading gold. And then, I want to look at natural gas. Oh, too many fat-fingered mistakes. So natural gas keeps breaking the levels I want to buy. Since it broke this V correction pattern, if it shows any sign of correcting like now, I think it's likely that we move down. But if it continues to break to the upside, I'm definitely a buyer of this. Like, for example, if we break kind of a resistance level, it's likely we move up. So, as you know, I'm more fundamental in my view, and most of the fundamental stuff I've been doing lately is I have some long-term plays in individual stocks. So, the thing here is I decided to sell Kennametal since I'm more of a mid-term trader. I sold Kennametal in this range. I'm kind of glad I did. It was up 2.13, but I'm kind of restructuring my stock and options portfolios. So, one of them at least. So I decided to sell Kennametal. I am holding Corning on this crazy move to the upside. It just keeps moving up. And I like its business as a whole a lot. I was buying down in this range. A lot of people told me not to do it, but I felt I kind of just had to buy Corning. It's just wonderful. And when it was below this 50-day, I thought the market's telling me it's just pretty cheap. So, and what else is kind of happy is volume keeps rising on its move to the upside. So, I sold Netflix because it's kind of being too weak. I bought in this range and I sold around here and took a nice small profit. But Netflix is being extremely weak and it's making me worry. And then on my blog I mentioned Pepsi. I still want to get long Pepsi. To me this looks like a serious move to the upside, but something I noticed is markets have short-term market movements and they have certain patterns that happens in all asset classes in every market. So what worries me here is XLU. It kind of did the same thing, but it's just trailing, and I lost money on the XLU options trade. So let's see. Oh yes, I would like to also mention how QE3 is not affecting, quantitative easing is not affecting the US dollar to the Japanese yen. The Japanese central bank announced that they are going to stimulate the economy with more buying. Now, since they bought so many bonds and everything's already owned, the markets aren't reacting, and the dollar has been falling on this QE3 stuff, but now we're going up. And also part of the reason is more economic fear stuff. The Fed did not drive the market. The market was already going to go down, and economics were kind of taking over. The market was realizing the economics, but the Fed, no, they didn't pay too much attention. And as you can see, gold is just sort of trailing. So we're strong on gold, but the dollar is rising. So what's likely to happen is gold's going to have another shoot up. We may move down a little bit right here, but considering correlation, I think the dollar's likely to rise, but we might see some out of whack correlations. Okay, thank you for listening. I hope you enjoyed this video. And that's the wrong one. Thank you.